Welcome to the deep dive. Today we're unpacking Tesla, TSLA. You've probably seen the headlines, but what was really going on between June 13th and 21st, 2025?
Yeah, it was an interesting period. The stock was mostly trading sideways, somewhere between $316 and $329 after a pretty good run-up.
Right, so our goal here is to cut through that noise, give you the key insights on Tesla without the overwhelm.
Exactly. Look at the big promises, potential problems, and what it all kind of means.
Okay, so this sideways action. Let's start with the positive stuff pushing Tesla forward. The big one seems to be the Robo-taxi. Finally happening.
It looks like it. The official launch of the Robo-taxi, or cybercab service, is set for Austin, Texas, June 22nd.
Austin, okay.
Starting with Model Ys for specific users, influencers first.
Yeah.
And the first fully driverless trip, planned for June 28th, Elon Musk's birthday.
Ah, symbolic. From the factory to customers. That's a big statement after years of talk since 2019, really.
It is. It's seen as this signal flare for future growth, fulfilling that big AI and autonomy promise. They're planning LA, San Francisco next.
A whole new potential revenue stream, maybe bigger than car sales eventually. But it's not just robo-taxis, right? There's new vehicle tech, too.
Definitely. Lots of buzz about a lower-cost EV, the Model Q, that uses their gigacasting tech.
Right. Gigacasting. Making huge car parts in one piece to save time and money. Crucial for a cheaper EV.
Absolutely key. And on the battery front, big news, June 16th, a next-gen LFP battery.
LFP, okay. What's special about it?
Well, they're saying 30% faster charging, 20% longer life, and 15% cheaper to make.
Wow, those are significant jumps.
Expected for the 2026 Model 3 and Y, pushing range over 600 kilometers. There was even talk of a super aluminum ion battery 10-minute charge, 80-year life.
Okay, that sounds almost sci-fi, but interesting. So clearly moving beyond just cars. What else strategically? An AI center.
Yes, in Amsterdam. $50 million investment, hiring 200 people just to optimize the FSD neural networks. Shows how central AI is.
Doubling down on the AI.
And they're pushing it to being a living OS company. Think controlling your home lights, temperature via the Tesla app for energy savings.
An ecosystem play. Interesting. And supply chains.
Diversifying away from just China and Australia, looking at Chile, Canada.
Yeah.
Using AI to manage it all better. Plus, their first big energy storage facility broke ground in China.
Even with trade tensions, they're investing big in energy storage there. What about that Austin factory shutdown I read about? End of June.
Yeah, that's planned. Halting Cybertruck and Model Y for about a week.
Doesn't sound great for production.
It's strategic. For equipment checks, efficiency upgrades, they expect it to boost second-half output, especially for high-profit models like Cybertruck. Short-term pause, long-term gain.
Got it. Okay, so lots of exciting potential. But the stock was sideways, you said. So let's talk valuation and risks. Why wasn't it soaring?
Well, classic market psychology, partly. A bit of sell the news as the Robo-taxi launch got closer, some investors taking profits.
So volatility was expected?
Yeah, analysts called it a short-term trading zone. Like on June 20th, the stock popped 3% on the Robo-taxi invites, but actually closed down 1%. Still down 21% year-to-date back then.
Right. And regulation must be a hurdle for robo-taxis.
Oh, absolutely. Huge hurdle. In Texas, some lawmakers were pushing to delay the launch, wanting more safety rules first.
Yeah.
Political pressure is real.
Makes sense. Success really hangs on getting past those approvals. What about ZEV credits? That sounded important.
ZEV credits, yeah. Zero-emission vehicle credits. States give them for selling EVs.
Yeah.
Tesla sells its extras to other automakers. It's been pretty significant income for them.
Like found money.
Pretty much. But California's regulation was withdrawn after Trump signed something related. That creates uncertainty.
How much uncertainty?
Well, those credits were apparently around 20% of Tesla's Q1 net income. So losing that, or even some of it, could definitely affect their profitability going forward.
And the technical picture, just reinforcing that sideways trend.
Yep. Stuck between roughly $316 and $329.
Yeah.
Technical resistance seen around $350, support near $290. It suggested more sideways movement, short-term at least.
So analysts were cautious.
Many were, yeah. Citing the general EV slowdown, plus these political and regulatory risks. Advising caution, maybe investing bit by bit.
Okay, let's pull this together. Tesla's in this really complex spot. Huge excitement around robo-taxis, new batteries, AI.
The innovation engine is running full speed.
But at the same time, you've got real short-term risks.
Yeah.
Regulators, the ZEV credit changes, market volatility.
Exactly. It's that balance. The long-term story really depends on them successfully rolling out these AI services like Robo-taxi at scale and getting wide adoption of the new tech.
If they pull that off, the growth potential still looks strong mid to long term.
Potential is there, yes.
But for you listening, the takeaway is be aware of the immediate bumps, the volatility, the regulations watch, the ZEV credit impact. Watching how that robotaxi launch actually performs and how regulators react is key.
Crucial to watch.
So what does this mean for you? Tesla clearly isn't just cars, it's AI, energy, smart homes, a lot is going on. This deep dive shows that even with amazing innovation, real-world stuff like rules and market mood always matter. As you think about companies like Tesla, how do you balance that shiny tech potential against the messy realities of markets and politics? Definitely something to think about.